We're going to turn now to the ABC News exclusive tonight after Donald Trump was fined nearly $355 million in his civil fraud case. Tonight, New York State's Attorney General Letitia James saying she's prepared to seize Donald Trump's assets, including his buildings, if he doesn't pay the money. ABC's Aaron Katersky one-on-one tonight with the Attorney General.
4 days after a judge ordered Donald Trump to pay $355 million for a decade of fraud, New York Attorney General Letitia James says she's prepared to do everything she can to make sure the former president pays his fine, including, she told us, seizing the buildings that bear his name.
If he does not have funds to pay off the judgment, then we will seek, judgment enforcement mechanisms in court, and we will ask the judge to seize his assets.
Trump was held liable for exaggerating his wealth and inflating the value of his real estate so banks would give him low-interest loans. Trump insisted the banks liked doing business with him.
Hey guys, Dr. John here. So this is happening right now. For decades, Trump sold the world one story: untouchable, self-made billionaire, beholden to nobody, too rich to be bought. The actual financial records, once judges and prosecutors finally got access to them, tell a completely different story. The gap between the brand and the reality isn't a rounding error, it's the whole thing. Judge Arthur Engoron, presiding over the New York civil fraud proceeding.
They said no victim, no one got harmed, the banks got paid back. So no harm, no foul. Why is that not the case in your view?
So financial frauds are not victimless crimes. He engaged in this massive amount of fraud, and it wasn't just a simple mistake, a slight oversight. The variations were wildly exaggerated, and the extent of the fraud was staggering.
Trump said the penalty against him would drive other businesses out of New York.
We'll appeal, we'll be successful, I think, because frankly, if we're not successful, New York State is gone.
But the state's attorney general told us she's not worried.
And last I checked, tourism is up, and Wall Street is doing just fine.
Even with an impending appeal, Trump must either put all $355 million in escrow at the court or post a portion of it as a bond with interest. And David, tonight the Attorney General is telling us she is determined to make Trump pay, even if it means seizing this building or others long in the Trump portfolio. David?
Aaron Katersky with the exclusive interview tonight. Aaron, thank you.
Determined that Trump had engaged in systematic inflation of his asset valuations across multiple years, informing banking institutions that his properties commanded dramatically greater worth than their genuine market value to secure more favorable loan conditions, reduced insurance premiums, and superior deal structures. This does not constitute some trivial accounting discrepancy.
We're also following some other developments, this time out of New York, where the Attorney General's office is now making moves suggesting that the state at this point may start to try to seize some of the former president's assets if he fails to pay that nearly $500 million bond in his civil fraud case. So something that, as we know, right now, he cannot do. His lawyers have argued he'll be unable to satisfy that.
And there's that deadline looming only about 4 days away. CNN's Kara Scannell is on this. Kara, what are you learning that Letitia James is weighing here? What moves is she making toward this?
So earlier this month, just about a week after the judge finalized the $454 million judgment that Trump personally faces, the New York Attorney General's office filed this judgment in Westchester County. What that means is that it sets the stage or makes it possible for her to potentially move forward to try to seize assets in Westchester. That's where he has a golf course. Also, the family compound known as Seven Springs, an estate crossing over 3 different jurisdictions. But it doesn't necessarily mean that she's going to move to seize those specific assets if it comes to that. You know, the judgment is also in New York, where Trump has a lot of properties: Trump Tower, his penthouse apartment there, the hotel at the corner of Central Park, as well as the office building 40 Wall Street. So it's essentially making it possible to set the groundwork that if she does want to move forward to put liens on these properties or move to initiate foreclosure proceedings, that is in place. They are on notice. Now, I also checked some of the county clerk's offices in some of the other places where Trump has properties in Florida, in Chicago. I didn't see any judgments there as of now. So right now it looks like the stage is getting set to move in New York. But of course, there is still time, although that clock is ticking, as Trump is waiting to see if the appeals court is going to allow him to post a smaller amount or allow him to not post any money until the appeal's over. The New York Attorney General's office has opposed that, and Trump still does not have the money to satisfy that $500 million judgment. Boris, Erica?
This represents a judicial determination following a comprehensive trial establishing that the figures Trump presented to financial institutions were deliberately manufactured fabrications. The fortune he incessantly boasted about was not the fortune he authentically controlled. And the distance separating those two realities, the distance between the artificially enhanced public declarations and the authentic underlying financial condition.
And in terms of that, right? I mean, are there any other options at this point? We know we've been talking about, of course, the 30 companies that refuse to loan or underwrite that money, and the deadline, as Boris pointed out, is looming, as you're talking about. Are there any other options left?
So Trump could potentially take out a mortgage on some of his properties. That's pretty complicated. A lot of the large financial institutions stopped doing business with Trump years ago. Also some properties, there are questions about what their value is. That was the issue in this whole case, that the judge found that Trump inflated the value. So companies generally would want to do their own homework before deciding whether to issue a mortgage on a property. And also mortgage interest rates are high right now. That makes the cost of doing that pretty expensive. And we've seen Trump publicly state that, this is an expensive process for him. That is one option. There could be a donor that comes in last minute and offers to give Trump cash for this. Remains to be seen if anyone credible is going to do that. And then, he could potentially have a fire sale of one of his properties on his own. I mean, the clock there, again, is ticking. It seems that is unlikely. Surely Trumps are working behind the scenes as they're facing this deadline. But, if not, we'll see what happens on Monday. Erica, Boris?
Kara Scannell, thank you so much. Let's bring Jennifer Rogers back in. So Jennifer, let's say March 25th comes, this bond isn't paid. How quickly will we find out if Donald Trump is going to have properties seized?
Is precisely the territory where the entire billionaire genius mythology resides. It is also, according to Judge Engoron's formal findings, the territory where the fraud was actively perpetrated. The individual who constructed his entire political persona around being so incomprehensibly wealthy that corruption was impossible has been formally adjudicated by a court of law to have systematically misrepresented the actual extent of his wealth to the very banking institutions from which he borrowed capital for years.
Well, it'll be still a bit of time, Boris. There's a whole legal process around seizing assets. First step, apparently, Tish James and her team has already started, which is to file the judgments in the relevant jurisdictions. But that's only the first step. And it's even more complicated when it comes to real property because, it's not like Monday you're just going to see a team of sheriffs go up and put a padlock on a building or anything like that. There's paperwork steps. Trump may have the ability to challenge some of those steps before things are actually seized. And of course, seizure and then sale and then taking the assets. So it will be a while before anything really happens. But I think that we will hear something from the court between now and then because there's a lot of scrambling going on. So I expect we'll hear something from the court one way or the other, whether they send it back to Judge Engoron for some sort of fact finding about what's been done and possible solutions, or whether the court itself will speak. We'll find out.
We also, as Kara pointed out, she went and looked. She looked at Miami, she looked at Palm Beach County, Cook County in Illinois. No judgments entered there. But when people think of the property that Donald Trump owns, the most well-known would be, of course, Mar-a-Lago and Trump Tower in New York. Do you see either one of those realistically being seized?
I mean, it's really hard to say. It just depends on how many assets there are that are in New York. New York assets are easier for the Attorney General to get to because they're here. They can file more easily. So I think they would probably start there. And remember, it's not just real estate. Even though Trump doesn't have enough in cash or cash-like assets like securities to cover the entire bill, he has some. So you would want to probably start with those liquid assets anyway. And then for the real estate that does exist, some of that value is already encumbered in other places as he's taken loans out based on the collateral of those real estate properties. So it's not as if you have the whole value of a Mar-a-Lago, for example, even if you knew what that value was, which of course is part of the whole reason that we're here in the first place, is that those values were exaggerated. So, it depends, but we'll see what they do.
It is a complicated picture. I have one more procedural question for you, Jennifer. There was this debate between the Trump team and the AG. The Trump team saying, we looked at 30 different companies. Nobody could provide us this massive figure, $464 million. Letitia James argued back, essentially saying, well, maybe they can't give you all of that, but you can go to these companies and separately they can give you small chunks that then add up to that number. Is that a realistic argument from the AG? Could Trump pursue that?
And now, as enforcement mechanisms authorize genuine access to genuine accounts, authentic banking documentation, verifiable financial records extending far beyond the meticulously curated public proclamations, what those records are exposing is fundamentally transforming the portrait in ways that the brand preservation apparatus cannot fully suppress. Because the figures do not negotiate with the preferred storyline. The accounts do not accommodate the narrative demands.
Sure. And, in fact, the one thing that Team Trump did say is, why don't you make it just $100 million loan, $1 million bond, and then that we can do. So then the question becomes, well, then why don't you just do 2 of those or 3 of those or 4 of those or however many you can get? There's one of the problems here, and I think the AG puts her finger on it in her responses. There was not much transparency around what the Trump team actually did and what negotiations there actually were with these 30 companies. So it very well may be that there is the opportunity to piece together smaller bonds to make up the whole amount. The issue is just making sure that the people can be whole at the end of this. If at the end of the long appeal, the large judgment is still upheld, then they need to be paid. So that's what the bond is for. But there's no reason they can't be a bit creative about how to make sure that money is there.
And one scenario, as you mentioned, we wind up seeing a fact-finding mission to figure out just how extensive the Trump team's research was in trying to get this bond. Jennifer Rogers, appreciate the time. Thanks so much.
Trump is fundraising, sending a text to supporters yesterday reading, "Keep your filthy hands off Trump Tower." So what he is doing, and I just want to be clear, he's not asking his supporters to pay his bond. He's asking his supporters to give money to his campaign, which also contributes to legal fees.
And what judicial authorities uncover when they genuinely penetrate the financial architecture constitutes the most candid depiction of Trump's fiscal reality ever made accessible to public scrutiny. Let me be meticulously precise regarding what carries documentation and what the account seizure framework is actually capturing, because this narrative involves a fusion of established judicial determinations and documented investigative reporting that collectively tell a coherent and specific chronicle.
Exactly, and you can double dip in a sense, because there is a limit for contributing to a political campaign. There's not the same limit for a legal defense fund.
And if I may, he's also, this is what he does, and
right.
Everybody in politics does this now. He's trying to rile up his potential donors to get angry to send money.
And one thing that is clear that we've seen really for now more than a year is whenever he is in legal trouble, it has helped him politically.
Yes.
So imagine this scenario. I heard one of our legal experts saying on our air this morning that the visual of Trump Tower being padlocked or something, and them seizing property. Imagine how that would help the former president politically. Imagine how those images would sort of build onto this. So even though legally and financially it's not good for him, we do not necessarily know that politically this is not good for him in the moment. It's just one more part of what a lot of voters see as a pile-on effect for him. So this drumbeat to the Monday deadline also keeps Trump consuming all the oxygen in this race.
Yeah, that's right. And that is such an important note of caution, because every single time, I can't think of one example right now, I'm sure there is, where sort of the conventional thinking in a conventional campaign about a conventional politician was,
from the mugshot
this is going to hurt him.
Other things.
Yeah,
boom,
right.
boom, down
Yeah, and it's, going even back to when he was trashing John McCain, didn't hurt him.
The civil fraud determinations, Judge Engoron's conclusion that Trump systematically inflated asset valuations, constitute established judicial findings emanating from a completed trial proceeding. The disparity between Trump's sworn attestations regarding his net worth And the actual documented valuations of his properties as established within those proceedings resides permanently in the court record. JPMorgan Chase, confirming through formal court submissions that it terminated more than 50 Trump-associated accounts following January 6th, is documented from authentic court filings reported by credible journalistic institutions. The documented pattern of discrepancies between public wealth assertions and underlying financial reality, established across numerous legal proceedings, forms part of the evidentiary foundation. What the account seizure framing captures is the process, documented and legally sanctioned, through which courts obtain access to financial records extending beyond publicly managed declarations, and the pattern of what those records have consistently revealed when accessed through legal channels, which diverges systematically from the public billionaire mythology in ways that are specific and verifiable. The narrative is authentic, the findings carry documentation, and the composite portrait they collectively paint is what this examination will describe comprehensively. The documented financial reality narrative originates with the most fundamental and specifically established determination from any Trump-associated legal proceeding. Judge Engoron concluded following a complete civil fraud trial that Trump had been systematically enhancing the declared valuations of his properties within financial statements furnished to banking institutions and insurance carriers. The particular examples documented throughout the trial included Trump Tower, where the residential triplex apartment was characterized in financial statements as encompassing approximately 3 times its genuine square footage, generating a valuation dramatically exceeding the property's authentic market worth. Mar-a-Lago, where the financial statements depicted the property as commanding far greater value than any realistic assessment of its worth as a private club situated upon land constrained by deed restrictions limiting its utilization. The Seven Springs estate in New York, where valuations within financial statements surpassed any credible independent evaluation across multiple properties spanning multiple years, the pattern remained utterly consistent. The figures Trump was presenting to lenders and insurers were substantially elevated beyond what independent appraisers and market analysis could substantiate. And Engoron determined, predicated upon that pattern, that the inflation was systematic rather than accidental, and that it generated genuine financial advantages for Trump through superior loan terms and reduced insurance rates that would have remained inaccessible had he submitted accurate valuations. That constitutes the judicial determination, systematic fraud for financial enrichment, and the disparity between the inflated figures and the authentic numbers documented within the court record represents the initial and most essential component of the what he finds changes everything narrative. Then arrives the JPMorgan dimension, because the bank's verified decision to terminate more than 50 Trump-associated accounts following January 6th transcends a mere political narrative concerning institutional values judgments. It constitutes a financial narrative regarding a major financial establishment concluding, after years of conducting business with Trump, that the association presented greater risk than benefit. Banking institutions render such calculations based upon their internal evaluation of a client's fiscal soundness, regulatory compliance profile, reputational exposure, and the specific patterns manifesting within account activity and financial disclosures. JPMorgan is not some modest community bank making decisions driven by emotional impulses. It stands as the largest banking institution in the United States, equipped with sophisticated risk management and compliance infrastructure. When they examined their Trump-associated accounts after years of possessing access to the authentic financial documentation underlying the public proclamations and resolved to terminate all 50-plus relationships, they were rendering a risk assessment informed by everything they had observed within those records. That assessment, documented within court filings, constitutes its own category of financial testimony. The institution possessing the most extensive access to the genuine numbers determined those numbers carried excessive risk to justify continued association. Let us penetrate deeper into every stratum of what the account access narrative actually exposes, because dimensions exist here connecting the financial reality chronicle to the political vulnerability chronicle, the counterintelligence chronicle, and the midterm consequences in configurations that render the account seizure narrative substantially more consequential than any isolated enforcement measure would indicate. There exists the inflation versus deflation dimension. The documented pattern of presenting elevated valuations to lending institutions while simultaneously presenting diminished valuations to taxation authorities, a pattern threading throughout Trump's financial history that carries particular legal implications across multiple jurisdictions. There exists the shell company architecture dimension, how the intricate entity framework of his empire generates precisely the category of opacity that enforcement access is engineered to penetrate, and what judicial bodies typically uncover when they gain entry to such structures. There exists the lender and partner response dimension, what transpires with Trump's financial associations when documentation becomes visible through judicial proceedings. There exists the foreign entanglement dimension, how financial records revealing capital movements can illuminate questions concerning international financial relationships that have been raised throughout his political tenure. And there exists the political brand disintegration dimension, what occurs to the self-financed billionaire beyond influence mythology when court-supervised access to authentic accounts exposes a financial portrait fundamentally distinct from what that mythology describes. We shall examine each sequentially. Commence with the inflation versus deflation dimension because this constitutes the most specifically documented pattern within Trump's financial history and the one generating the most immediate legal exposure across multiple jurisdictions simultaneously. The civil fraud proceeding documented the inflation component, presenting elevated asset valuations to lenders and insurers to obtain superior terms. But there exists a documented inverse aspect to that pattern which has received extensive reporting and which generates its own distinct legal exposure. Taxation authorities receive different financial documentation than lending institutions. For lenders, the incentive directs toward presenting the maximum possible asset valuations because elevated valuations support larger loans at favorable rates. For taxation authorities, the incentive directs toward presenting diminished valuations because reduced valuations decrease property tax obligations and can influence other tax calculations. The identical property characterized as worth hundreds of millions in a financial statement submitted to a bank for loan purposes may simultaneously be characterized at a fraction of that valuation within a property tax assessment challenge filed with local authorities. That concurrent inflation for lenders and potential deflation for tax authorities, if documented within authentic financial records, creates exposure for potential fraud extending in both directions. Enforcement access to genuine account records and authentic financial submissions across multiple contexts rather than merely the documents selectively presented within any single context is precisely what exposes that pattern. The judge discovers that the figures in different contexts communicate different narratives regarding identical assets. And that discrepancy, documented within the actual records, rather than within publicly managed proclamations, constitutes precisely the category of finding that fundamentally transforms how the financial portrait appears. Now examine the shell company architecture dimension because this constitutes the organizational framework that renders financial opacity achievable and that enforcement access is most specifically engineered to penetrate. Trump's empire is structured through an intricate network of limited liability corporations, hundreds of separate legal entities, each capable of holding assets, entering contractual arrangements, receiving revenue streams, and conducting transactions without affixing Trump's name directly to the activity. That structure is not intrinsically unlawful. Wealthy business operators utilize corporate frameworks routinely for legitimate legal and taxation purposes. However, the structure simultaneously generates the precise variety of opacity that complicates tracing capital movements, identifying ultimate funding sources, and determining whether transactions between affiliated entities occur at arm's length, or whether they function to relocate capital in configurations obscuring the authentic financial portrait. When judicial enforcement accesses financial documentation spanning the complete entity architecture, not merely the publicly visible upper tier entities, but the underlying limited liability corporations and their associated accounts. The portrait that materializes is more comprehensive and more revelatory than anything obtainable from publicly submitted documentation. Transfers between affiliated entities that superficially resemble ordinary business transactions may appear fundamentally different when the complete context becomes visible. And the pattern of what courts and investigators typically uncover when penetrating complex shell company structures in matters involving sophisticated defendants who have benefited from professional legal and accounting counsel across decades is that the architecture was not constructed exclusively for legitimate tax and legal efficiency. It was also constructed to render capital movements more difficult to trace. And rendering capital more difficult to trace itself constitutes a finding that transforms the portrait. Now examine the lender and partner response dimension, because what transpires with Trump's financial associations when account documentation becomes visible through judicial proceedings represents one of the most immediately consequential effects of the enforcement access narrative. Lenders render credit determinations based upon financial information furnished by borrowers, and the credibility of that information is foundational to the association. When the civil fraud trial documented that Trump had been systematically enhancing asset valuations within financial statements provided to lenders, every current lender reviewing that documentation was concurrently reassessing whether the financial information they had received was subject to the identical pattern. Deutsche Bank, which had functioned as Trump's principal lender when other major institutions ceased conducting business with him, had already been extracting itself from the association prior to the trial. The trial documentation furnished every remaining or prospective lender with a specific and judicially established foundation for concluding that the financial information they had received or might receive cannot be relied upon absent independent verification of a character that most commercial lending associations do not ordinarily necessitate. That dynamic, documented judicial determinations of systematic financial statement inflation, generates a self-perpetuating cycle of financial association deterioration. Each new judicial determination renders lenders increasingly cautious. Each new enforcement access renders partners increasingly anxious, and the compounding effect of multiple concurrent proceedings, fraud judgment, tariff refund obligation, hush money penalties, each carrying its own enforcement access to financial documentation, creates an environment wherein the financial associations upon which the leveraged empire depends experience sustained pressure from every direction concurrently. Now address the foreign entanglement dimension, because this is where the account seizure narrative connects to questions that have been raised throughout Trump's political tenure and that acquire particular relevance within the context of his present Iran conflict determinations. Financial records revealing capital movements across the complete entity architecture, encompassing transfers involving foreign parties, payments from foreign entities, financing arrangements with foreign financial establishments, illuminate questions concerning international financial associations that have persisted within public discourse since his initial term. The Jack Smith Business Motive Memorandum, which concluded that prosecutors believe Trump retained classified documents pertinent to his business interests, raises particular questions regarding the intersection of his financial interests and his national security conduct. If account records expose financial associations with parties whose interests intersect with the foreign policy determinations he is rendering, if capital movements document connections to entities whose nations are affected by the Iran conflict or by his trade policy determinations, those connections become the most specific and most concrete manifestation of the financial entanglement concern that has been articulated in abstract terminology for years. The concern is not hypothetical. It represents the specific counterintelligence vulnerability that the Smith Memorandum implicitly identifies. A president whose financial interests intertwine with his policy determinations in configurations generating susceptibility to external influence. And account records that render those entanglements visible constitute precisely the category of finding that transforms everything regarding how his policy determinations appear. And here resides the political brand disintegration dimension, because the self-financed billionaire beyond influence mythology is not merely a personal brand assertion. It constitutes a political argument. It forms the foundational justification for why Trump's supporters believe he remains impervious to financial influence, why they trust his policy determinations as reflecting American interests rather than personal financial interest, why they embrace the assertion that his wealth distinguishes him from conventional politicians dependent upon contributors and special interests. If account records expose a financial portrait fundamentally divergent from what the mythology methodology describes if the records demonstrate a leveraged empire contingent upon favorable financial associations, with discrepancies between publicly proclaimed wealth and documented reality, with capital movements generating questions regarding foreign financial entanglements, the foundational political argument disintegrates. Not merely the personal brand, the political argument, the rationale for trusting that his determinations are rendered in the public interest rather than his personal financial interest. And that disintegration, documented within authentic account records rather than within opposition research or partisan allegations, constitutes the most specifically damaging political consequence of enforcement access to his authentic financial reality. Let us distill this into 4 clear points, furnishing the complete and candid portrait of what judicial access to Trump's financial accounts exposes, why the documented determinations transform the portrait, and what the political and legal ramifications are for an empire and a presidency whose credibility depends upon a financial mythology that the records consistently contradict. The most fundamental and specifically documented determination from judicial proceedings possessing access to Trump's financial records is the systematic enhancement of asset valuations within financial statements furnished to lenders and insurers, a determination established following a complete civil fraud trial by Judge Engoron and now permanently embedded within the judicial record. That determination is not a political accusation. It constitutes a judicial conclusion grounded in evidence following adversarial proceedings, wherein Trump's attorneys possessed every opportunity to contest the factual record. The disparity between the enhanced figures and the authentic underlying valuations documented within the court record represents the initial and most essential component of what transforms everything regarding the financial portrait. The wealth he was presenting to lenders was not the wealth he authentically controlled, and that disparity is now judicially established. The shell company architecture generating the opacity of his empire is specifically engineered to render capital movements difficult to trace, and enforcement access penetrating that architecture to the underlying entity level exposes a more comprehensive and more revelatory financial portrait than anything obtainable from publicly managed proclamations. Transfers between affiliated entities. The utilization of multiple limited liability layers to execute transactions, the pattern of how revenues and expenses traverse the structure. These constitute the specific characteristics of complex financial architectures that enforcement access is engineered to scrutinize, and the pattern that courts and investigators typically uncover when penetrating complex entity structures is that the architecture serves purposes extending beyond legitimate tax and legal efficiency. Precisely, the category of finding that transforms how the overall financial portrait appears. The lender and partner response to enforcement access generating documented records of systematic financial statement inflation, combined with JPMorgan's verified determination to terminate more than 50 accounts following January 6th, creates a self-perpetuating cycle of financial association deterioration that threatens the leveraged financial model upon which the empire depends. Each new judicial determination renders lenders increasingly cautious regarding the reliability of financial information furnished by Trump-associated entities. Each new enforcement access renders partners increasingly anxious regarding the visibility that association with those entities generates. And the compounding of multiple concurrent enforcement proceedings, each carrying its own access to financial documentation, creates an environment wherein the financial associations sustaining the leverage structure experience sustained pressure from every direction. The political brand consequence of judicial access to financial records documenting a reality fundamentally divergent from the self-financed untouchable billionaire mythology constitutes the most consequential political dimension of the entire account seizure narrative, because the mythology is not merely personal image cultivation. It forms the foundational political argument for why Trump supporters believe his determinations are rendered in the public interest rather than his personal financial interest. If the records expose a leveraged empire contingent upon favorable financial associations, with foreign financial entanglements generating questions regarding the independence of policy determinations, with discrepancies between sworn attestations and documented reality, the foundational argument disintegrates. Not within the partisan political domain where it can be dismissed as attacks from adversaries, but within the documented financial record, within authentic account histories, within genuine capital movements, within the figures that the brand preservation apparatus cannot negotiate with or spin away. The judge accesses the accounts. What he uncovered resides in the record. And what resides in the record transforms everything regarding how the power and the independence and the untouchability appear when the authentic figures become visible.